Let's talk about one of the biggest money leaks in your business if you don't get this right, missing out on every single business expense deduction you qualify for. That means you're literally leaving thousands of dollars on the table every year. And that's cash. You could be reinvesting, paying down debt, or just putting in your pocket. If you're not crystal clear on what you can deduct and how to track it, you're risking audits, missed savings, and a tax bill that's way higher than it needs to be. Right now, your business is operating in a complex tax environment. The IRS has rules, but those rules are designed to let you keep more of what you earn if you play by them. It's not just about knowing the deductions exist, it's about knowing which ones apply to your unique business model and how to document them flawlessly. Whether you're running a home-based consulting firm, an e-commerce store, or a service agency, cash flow and profitability hinge on your tax strategy. The 12 most valuable deductions I'll walk you through are not just random line items. They are the core pillars that can reduce your taxable income dramatically. But knowing them isn't enough. How you track, categorize, and document these expenses is what makes the difference between an audit nightmare and smooth sailing. So let's start with the 12 deductions you absolutely need to know inside and out. First, advertising. This includes Facebook ads, Google AdWords, website hosting, and design services. If you pay for it to attract or retain customers, it's deductible. Next, the home office deduction. This one trips up a lot of people because it's not just about having a desk at home. Your home office must be your principal place of business or a place where you meet clients regularly. You can deduct a portion of your rent or mortgage, utilities, and even insurance proportional to the space used exclusively for business. Vehicle expenses are huge but often misunderstood. You can choose between the standard mileage rate, currently 65.5 cents per mile, or actual expenses like gas, maintenance, insurance, and depreciation. The key is keeping a detailed logbook or using apps like MileIQ to track your business miles accurately. Travel expenses, including airfare, lodging, and even tips, are deductible when the primary purpose is business. Meals are deductible at 50%, but only if they are business related, and you keep the receipt with notes on who you met and what was discussed. Education is another gold mine. Courses, books, webinars, and conferences that improve your business skills or industry knowledge are deductible. Software subscriptions like QuickBooks, Canva Pro, or any tools that keep your business running count too. Professional services, think accountants, lawyers, and consultants, are fully deductible. Health insurance premiums for you and your family can be deducted if you're self-employed and not eligible for a group plan elsewhere, or retirement contributions to SEP IRAs or solo 401ks not only save you money on taxes, but build your future. Startup costs up to $5,000 in the first year are deductible, and don't forget depreciation on equipment and business property, which can be a huge tax saver over time. Now, knowing these deductions is one thing, but capturing every single deductible expense consistently is where most business owners fall short. You need a system that works for your business and your lifestyle. Start with a dedicated business credit card, separate from your personal spending. This immediately segments your expenses and makes tax time much easier. Next, implement a receipt scanning app like Expensify or Dext. These apps allow you to photograph receipts instantly, categorize expenses on the go, and sync them with your accounting software. The key is the 3-second rule. Within 3 seconds of getting a receipt, scan it. Don't let piles build up. Then, every month, sit down and categorize expenses in QuickBooks or your chosen platform. This monthly habit prevents a year-end nightmare and ensures nothing slips through the cracks. But here's where many business owners get into trouble. Certain expenses trigger IRS red flags. Excessive meals and entertainment claims claiming 100% vehicle use when there's personal use mixed in, reporting hobby losses instead of profit, and improperly documented home office deductions are the top triggers. The IRS isn't out to catch you making honest deductions, but they will scrutinize anything that looks too good to be true. When you claim these deductions, keep impeccable records, date, purpose, attendees, and business connection. For your vehicle, a mileage log is non-negotiable. For your home office, document the square footage and keep a floor plan or photos. This level of detail isn't overkill. It's your insurance policy against audits. So here's what you need to do today. Take out your most recent bank and credit card statements and identify every single potential business expense. Then download and set up an expense tracking app like Expensify or Dext. Start scanning those receipts immediately. Next, schedule a recurring monthly calendar reminder to categorize and reconcile your expenses in QuickBooks or your accounting software. This system will keep you in control and maximize your deductions. Once you've got this system in place, we'll dive into how to optimize your deductions even further, including advanced strategies for depreciation and retirement contributions. But getting this foundation right is what will save you thousands this year and every year after. Remember, your business deserves every dollar you can legally keep. Let's make sure you get it.